Hi, this is Mark with your analysis for the week commencing the 26th of January. Sometimes as a mentor, you can be under pressure to come up with trades even when you feel that the current market scenario is too risky. Now there are a few things I'm going to show you in a moment of potential trades based around my monthly analysis as I have been doing in recent months. But there is a very big caveat this week about why it is very dangerous to trade. Fundamentally, it is a dangerous place to trade because of the fact that the back end of last week, as you can see from the CNBC report, the Dow fell the most points since 2011. And if you read this and other articles, you'll also find that there is problems in the emerging markets. The Argentinian peso has collapsed, I think, 20% in the last few weeks, and Turkey is in a mess as well, and their lira is falling, and a lot of the investments these days are in emerging markets. And you then end up with a scenario that is known as risk on or risk off. Money's being pulled out of these areas and then put into treasuries. If you want to know more about this, I recommend you have a look in the forum. One of our senior members, Mary, who is called Trade Spotting in the forum, is an expert in this scenario. And what Mary does is she looks for fundamental reasons to take a trade, and then she looks technically for entries. She has done a detailed study here of numerous pairs, and she does this every week, and she does explain about her thoughts to do with risk on, risk off scenarios. There is a further problem. The weekend saw the annual jolly for all the top financial dogs and honchos in Davos, Switzerland, and we don't know what impact any of that may have had. Iran were there this year as well as China. And then we've also got tomorrow, Monday, we have a bank holiday in Australia. It's Australia Day. And you've got Monday, Tuesday, there's Eurogroup meetings. And what everybody's really waiting for is the Fed. The markets, I believe, will wait until after the Fed statement on Wednesday for some sign of direction. And there's also the further thing, of course, is if the markets open on Sunday and the Dow does start to tumble even further, then that could have a knock-on effect. And as most of the trading systems around the world are semi-automated at least, you can rapidly see a scenario where everything goes into meltdown and technical lines and technical analysis goes out the window because the price will simply pile straight through. So, if you are going to trade, what do you do? Personally, I'll only take trades zooming out to longer time frames, and I showed you at the end of December my analysis for 2014. I believe that the CAD was on for a big move. I see the CAD could well go to 120 this year, if not beyond, and it's already moved 500 or 600 pips. The difficulty here was it missed my entry by a handful of pips and went 600 pips, and I showed you in recent weeks how you then have to start following price up. But main areas that we start to look at for potential trades. This is the dollar CAD. We did have an opportunity to get in around 107 because what happened is price stalled here, and I showed you the other week this became a strong resistance area, and when it broke you then had the opportunity to get in here. Now we need a pullback. Price has stalled up at the top. It did break through 110, and it's more clear actually on the daily chart. You have this pin bar reversal candle here around 1170, and you do have a daily trend line on here. So if you were looking on a daily, you would start to look anywhere around 1030 area for potential longs. Personally, I'm going to look only on longer term charts, and if price does make a move back down to 10800 this week after all the carnage, and wait for everything to settle down after any huge moves should they arrive, then I would be interested to the CAD here. It's 61.8 fib, and you also have this trend line in the area as well, and the EMAs are moving up as well. If we go back to this monthly chart, you can see the 55 EMA has swung around here as well. So lots of support and suggestions that we are on for the move up to the 120, but the only way I can get involved now is to wait for a pullback. Similarly, the euro pound. It's a euro pound on a monthly, and I said in my analysis for 2014 I expect this to go down to about 77 this year, and I was showing you how in recent weeks we could look for pullback entries. Now look on the monthly, we've gone absolutely nowhere. We haven't even closed outside this trend line, and I'm hoping the next few days this does. But I am in this trade on my live account. This is the demo. I've left this one running here. The difficulty with all of this, when you're trading off longer time frames, is you have to get used to the fact, and it's not easy, that this trade, for example here, the entry was at 83.40 that I showed you the other week. This trade was at one point 170 pips in profit. The second part of this trade now is only 40. So we've just seen 120, 130 odd pips wiped off the potential profit. And this is the mindset and the difficulty from trading from longer time frames. However, let's have a look for this week. I'm still looking at the same thing. This does look bullish at the moment. The Bollinger Band has slammed shut. Stochastics are rolling up. We're almost on for a 5-8 cross, so we could be on for a move back up. Personally, I will be interested. I'd be very interested to short anywhere around 8,400. That for me is the main area. Let's move the fibs now onto this area. So it's 78.6 of this move. You've got 200 EMA, would be outside the Bollinger Band. So if we get a big move on the euro this week, I will be interested to short 8,400. And it's like I said at the beginning, I'm really just looking for main areas. However, 83.40, 83.50 again, you've got this weekly 200 EMA. So if I'm trading this on a 4-hour chart and having a look at the charts, I will be interested to enter here once again. Dollar yen on a monthly, and the yens are most receptive to risk on and risk off scenarios, and we've now pulled back. It's the monthly candle, so it's not closed yet. At the moment we could be on for tram tracks and a reversal here. Now I only want to long this pair this year, and 100 is the main area for me. Intraday, I showed you recently, we were looking at 101, and then I got in at 103. And I was going to let this run, but once it broke this trend line here, this trend line goes back to last October. The next big trend line here goes back to 2012. The main area for me on here is 100. I will be interested to long, and I will have my stop a long way down, long way for some of you, 140 odd pips below this 200 EMA and 78.6 fib. So it's a 150 pip stop. Still risk the same amount of money, but the reason I'm doing that is short term I'm expecting it to move 700 pips, so you've still got risk reward ratio there of over 1 to 3, but I suspect this could well be on for a move up to 120 this year. So 100 would be very, very tempting to get in for a big move. Euro, said in recent weeks, I've been leaving this alone because it's been all over the place. I mean, all it's doing really, it's broken trend lines, it's bouncing around. This area here, down here, 135.20, 135.00, appears to be strong support, and it was strong support and resistance before. Personally, I'm leaving it alone. It's lacking direction at the moment, and the Fed statement certainly could be the one that will give this some direction. If you're going to trade it intraday, it has been bouncing, and previously I had this in as support. In the last week or so, it's now moved down here, so you're looking around 35.30, and it's simply bouncing 35.30 to 3700. So if you're going to trade it intraday, be looking for bounces in those areas. Aussie dollar on a monthly, I said to you at the end of December, had this candle closed below, I was going to be shorting because the BOJ said they want it down at 8,500. They've now come out and said they want it to 80, and unfortunately that candle didn't close in the right place. But what I said then is look for a break and a close below 88.30 and 88.30. The reason being is we've had some spikes down to this area. Then when you get a clear break and a close, you look for the pullback and you look for a move down. Now at the moment it's hurtling like a steam train away from us. For me, I need a pullback, and 88.20 will be of interest intraday. If we do have some big silly moves this week, then I would be more interested to short at 8900. And one clue with the Aussie dollar is gold, and this another one is Mary in the forum, I think it was her that first pointed this out. We have an inverse head and shoulders pattern on gold, and here you have the left shoulder, the head, the right shoulder. This could be the neckline, or you could even take it over here. But the theory goes with this: you measure from the neckline to the head, which is roughly around 700 points here, and that move should be reflected in a move upwards. Usually the Aussie dollar goes in the same direction as gold. So it's just a clue, if the gold sets off back up north, that the Aussie dollar will at least retrace. Other than that, the Aussie dollar yen fell off a cliff. This is a weekly move. It broke the trend line last week. It did the pullback, so the clues were there, and then it has simply piled down. And I've shown you before, the reason I leave these old trend lines and support and resistance lines is because they do seem to become important later on. Strong previous support and resistance and 78.6 fibs. So if it was going to stop anywhere, this was the point. And the thing here for me is I am interested in this if it pulls back to 90 for a potential short. And the reason being, it was a major move last week. We're way outside the weekly Bollinger Bands, and price rarely stays outside. So if it's going to pull back, and that was the major line in the sand, then I would be interested to short. But it is risky. The British pound on a weekly, and the British pound has simply been bouncing very similarly to the euro. Lots of positive news keeps coming out on the pound, and yet we're still failing to break above this monthly 200. Swing traders amongst you will be interested to short here once again. It only requires a small stop, and you have a potential move down here to the trend line of 200 pips. So risking 30-40 pips for 200, 1 to 5, is excellent risk reward ratio. However, it's counter trend, and therefore it's riskier than normal. I usually half my stake when trading counter trend. It's tricky. Look along the trend lines, wait for after the Fed meeting, because again it will affect this. And there was a big drop on Friday on the pound. Other areas of interest here, 163.100 would be of most interest to me. So trading from longer time frames, if we get a big drop this week, I will be interested to long at 163.100. I always try to find as many reasons as possible to take a trade. If we put a trend line in, you'll find that intersects around here as well. You've got the 55 EMA, 78.6 is the recent move, and 6,300 whole number, and previous support and resistance. So in other words, loads of reasons why that is the area I will be interested in on the British pound. Other than that, in recent weeks, it's not a recommendation this, but because I am a technical trader, I have been looking around at some of the more obscure pairs. And one of the members, I think it was William, mentioned this USD NOK to me, and he sent me a copy of a report that basically says that the Norwegian economy is 10 times healthier than the US, and this is kind of record low territories that we're in here. And I've been simply shorting at 16200. I showed you on Facebook what I'd been doing, and the other option then is back up again. So you're bouncing again between these areas. So we're in a range. We're range trading. You look for longs here and you look for shorts there. Also looking at the CAD the other week, and the GBP CAD kept coming up. It was hitting 180, and then finally we got the breakout. You look for the pullback and a view to a long. Stopped at one of Pierre's pivot points as well. So that was another pair I've been watching. I've also got this on my radar. This is the New Zealand dollar and the Japanese yen, and we've got this upper wedge shape has been broken on a weekly chart, and therefore possible shorts on this one. So I say it's not particularly that I'm wandering all over the place, and I certainly don't recommend it if you're new, but from a technical perspective, when everything else looks a bit silly, it can pay to go looking at other more obscure pairs. Final one I've been watching is the Aussie dollar, New Zealand dollar, and this one broke and closed here, missed my entry by a fraction of a pip. Oh dear, not been the luckiest of months this month. Then pull back again, but anywhere pull back to this area, I will be interested to short this pair. Okay, tin hats this week. Get yourselves under the bed. Try to resist trading, because really it's more likely that you're going to be gambling this week than trading. Wait for the stock markets to open, wait for the FOMC news, and then decide whether you dare come out from under the bed. Have a good week.